Hello everybody, Stuart Heath here, CEO and founder of Harvard Grace Capital, back with week number 33 of our Nerdy Numbers series with current economic data. Now we find ourselves here at a midstream point. We have a Fed meeting tomorrow. Everyone expects that there'll be another quarter point rise. The government is shut down. We're not getting a lot of government data, but CPI did report last week that inflation was up 3% year over year, which was actually 0.1% better than expected, and the markets go crazy, and the Fed is still expected to move. We also just this morning got some ADP employment data, which shows that the labor market is not weakening; it is somewhat stable. And so then there's, that brings in all the naysayers who think the Fed should not be cutting. We've got declining inflation with a good job market. It's like, well, this is exactly what we want it to be. Why would we cut? I don't think that's quite the way to look at it. We're trying to get to that neutral rate. Anyway, so that's what's going on. The 10-year Treasury in the last 5 days has been bouncing above and below 4.0. Yesterday it closed at 3.99. The open for today, the 27th, hasn't happened yet as I'm speaking here. And then there's other data that keeps trickling out. So there's several data points coming out. One of the bigger pieces was that retail properties in the real estate world have had a massive absorption here in Q3. A lot of available space has now been leased, and a lot of big box stores are taking what's considered to be somewhat second generation, not the newest stuff on the market, in order to get access to some retail capital. Now, if you remember, just a few years ago, retail was deemed dead, so was office. And what's happened in both of these markets is that they're dead. Nobody could get financing to build new, and now there's hardly any new product on the market. And now, now there's a supply shortage. So supply and demand operating the way they always do. Rates have gone up drastically for the space that is available. I expect we will now soon, in the next 12 months, see a large spur of new retail space coming to market, and that will that'll start a whole new cycle of supply and absorption and things of that nature. But it's really great for those that own those properties now. Same thing's happening in the office market. So we will all wait and see what the Fed does. We hope that the government will get reopened soon. One thing's coming the 1st of November. We know that the SNAP payments won't go out. So the pain is about to come to millions more people in the country rather than just the government workers. And I suspect that pain in the voting bloc almost always motivates politicians to do what they need to do. So hopefully it's resolved before the end of the week. Thanks for watching. I'd love to hear your comments. Thanks, guys.